eInvest income generator, it's aimed at people who are looking for a superior income compared to term deposits. And we know that there are, in terms of Australian mums and dads, there are billions upon billions of dollars sitting in term deposits at the moment, earning very little, circa 2% or just a little bit above that. And that's just not putting the bread on the table for a lot of Australians. And we just keep hearing that when we talk to people about their income requirements. So I think it's got widespread appeal on that basis. But when you dig a little bit deeper, I think there are a couple of specific groups of investors, or Australian mums and dads, if you like, where I think it could be very, very relevant. The first one is all those people that are moving towards retirement, or in fact are in retirement. They need income, and again, term deposits just aren't doing that. So that's the first group. I think the second group is which is now a very large group, of course, is the self-managed super fund investors, the SMSF investors. And we all know that there's billions upon billions of dollars sitting in that bucket as well. And again, it's barely keeping up with inflation. So I think there are two groups of investors there where this has widespread appeal. But I think, frankly, for anyone who's looking for a rate of return in terms of an income requirement over and above the current term deposit rate, I think it's got very, very widespread appeal in that sense. This strategy is very much a natural fit for us. We've always loved our dividends, and in fact we've been managing a unit trust, an unlisted fund, in the same way that we're going to be managing eInvest income generator going forward for 12 years. So we've got a track record of over a decade there. So at perennial value, there's myself and there's a team of 12 of us, and in terms of people who are analysing stocks. And as we all know, there are lots and lots of stocks which one can invest in the stock market. But because we've got a very, very specific income requirement, we need to do an awful lot of work, if you like, behind the scenes, which we do day in and day out, to make sure we identify a specific group of stocks which we believe will achieve the objectives we're looking for. Just on that, the objective of this new capability is to deliver on a rolling financial year basis, a grossed up return of 7%. So you can see there that that grossed up yield of 7% clearly far superior to what one can achieve out of term deposits at this current point in time. There are two parts to that 7%. The first part is that there will be a cash dividend yield which will be paid out on a monthly basis over a financial year, and that'll be 5%. So that's the cash dividend yield which we're effectively receiving from our companies, and then we pass through by way of a monthly dividend. That's a feature which I think many investors will like as well, because as we know, investing in listed companies now, pretty well all companies only pay distributions or dividends on a 6-monthly basis. Though they are listed share, called eInvest income generator, 5% divided by 12, so that'll be putting the bread on the table every month as opposed to every 6 months. And then at the end of the financial year, of course, we'll be paying out any franking credits which we've accumulated over the 12 months as well, and any realised gains which we've achieved as well, we'll be paying that out. So we've got the 5% kicking through, and then you've got the 2% at the end of the year. The final point to make is that we start off with about 200 companies and we end up with about 30. So there's a lot that goes on between there and there. And what we're looking for are companies with the following attributes. They need to be well managed, they must have strong balance sheets, and they must have a strong track record of profitability. So you can see there, distilling circa 200 down to about 30 stocks. That's only 15% of the universe, so there's a lot of stocks that just simply don't satisfy that criteria. This will be a listed fund. It'll actually be called an exchange-traded managed fund. There are already exchange-traded managed funds on the stock market, so it's nothing new in that sense. It's a proven structure. The code will be EIGA, and it'll trade daily on the stock exchange as any share does. So if you like, we're sort of bringing together that 12-year track record of proven delivery of superior income, particularly over and above term deposit rates. And we're putting it in a structure which is much more easily accessible to investors these days by way of a listed share.